Hello traders, Gary Wagner here, approximately 9 o'clock in Honolulu, 3 o'clock in New York on Monday, 15th day of June 2015, and welcome to our premiere edition of Trending Markets. What a week to begin our new expansion of the gold forecast. The interesting thing is we've got a lot of fundamental news out there, two items in particular, which could dramatically influence the market and fundamentals which could shift current trends of different markets that we're looking at. In terms of the euro dollar, we currently have that up nominally, up almost 1/3%, 0.27, 0.26 at roughly 112, 113 on the day. This follows news as Draghi comes out and basically is saying that the solution to the Greek crisis is now in the hands of Greece exclusively. The IMF have offered them a tentative solution and bailout funds. Of course, those bailout funds come with contingencies, and whether or not that will be accepted in Greece is what we're all looking at. The second thing, of course, is the FOMC meeting, which is scheduled to begin tomorrow. And following that, of course, is the press conference on Wednesday, in which we will hear Yellen speak, and that's what everybody is waiting for. So with all of that fundamental data coming out, of course, these technical studies could change if the unexpected happens. When we take a look at our current take, though, on the market, we do have the euro dollar trading nominally higher, and it has been trading up. And realize that this move in the euro dollar has really been a counter trend to the overall trend of the euro, which has absolutely been down. When you consider that as recently as June, July of last year, 2014, we had the euro dollar at a record, call it $1.40 per euro dollar, almost moving to parity. In fact, we hit a low of roughly $1.05 per euro dollar back at the beginning of this year. We have seen a tremendous rise from that 105 area up to a high of about 115, and from there we've seen it come under pressure. The overall longer term direction of the market is without a question of a doubt down. However, we are currently in a counter trend, and that counter trend to our bear count, of course, would be up. We can see that here in our MACD. We can also see that here in our pricing. The question is whether or not we have completed this counter trend up, and we will return to lower pricing in the euro, and any kind of stalemate, any kind of unresolved issues, threats of Greece leaving the EU, these things would absolutely signal on a fundamental basis a return to lower pricing. When we look at our current chart, and this is our daily chart, and you look at the basic targets that we had projected this euro could go to in this counter wave, you can see that it's absolutely hit the lowest level, which is 115. Highest level is up at around 125. Mid-level, call it 121. But we've certainly seen the market hit that point. And now the question is, has this rise that we have seen from 105 up really terminated? Will we see euro dollars go lower, or will we see a return to this pricing structure in which this counter trend continues to the upside? Now, the potential crisis which is currently unfolding in the European Union, in Greece right now, has absolutely spilled over into the U.S. equities markets. U.S. equities under tremendous pressure today. Triple-digit decline in the Dow Jones Industrial Average, below 18,000 at 17,779, putting it off roughly 118 points on the day. S&P's not really faring that well also, down about 11 points or a 0.5% at 2073. Now, even as we look at these markets, this being the E-mini, this is a longer term weekly chart. No doubt we are still trading within this upward slope or upward channel. We've just added some channel lines. There's no doubt we are trading close to the lows of this channel, well below the midpoint, but we're still within the confines of a market moving higher. We would really need to see a break below this point before we got bearish on this market. But as I said, this week absolutely could be a very pivotal week in terms of a dramatic change in market perception. But until we see any kind of dramatic change within the fundamentals at play in the market, we would look for shallow retracements followed by moves back to the record highs. Now, in terms of our current technical studies, we are looking at the Elliott wave currently at a 5 count. We've had this long, we've had our 1, 2, a very long 3, 4, and the question is whether or not we've completed this 5 count. If in fact we have, we could go into some sort of an A, B, C correction, all things being equal, and then return to our upward 5 count. The other thing that we can say is we've had some serious resistance at these record highs, and rather than seeing new record highs come in, we have simply been flirting with the fact that each time it's come up and hit these highs, it has run into a pretty solid wall of resistance. So we want to pay close attention, but there's no doubt we could see some sort of a correction within this market. We certainly have the fundamentals at play that could warrant that kind of activity. Now, the last charts that we looked at were very long-term studies based upon our weekly charts. Now we're looking at a 2-hour chart in the E-mini, the S&P 500, and when we look at that, what we're seeing is the market going into extremely oversold scenario, this being our stochastics on the bottom. Our 120-minute chart we have gotten across, but on our 240-minute chart, we certainly don't have that cross yet. In fact, let's go ahead and pull up the 120 very quickly. And as you can see on our 120, meaning a 2-hour bar chart, we're certainly at that point in which we appear to have hit the lows of the day and could move up. Our basic Elliott wave count and our forecasts are for higher pricing anywhere between, call it 2090 on the high side, and on the low side about 2080. As far as some of the other markets that we are following on trending markets is crude oil. Crude oil is down today below $60 a barrel, and we do have an interesting scenario developing in that market. Short term, very, very short term, this is of course a 2-hour chart, we could see this market clip up as high as anywhere between $60 and maybe $60.50. However, longer term, and really to gauge that, we'll look at our daily charts. We are looking for this market to head lower. In terms of a price structure itself, it could be as low as about $55, but I do think that we will see crude oil drift lower over this next week. As I said at the beginning of the show, this could absolutely be a very pivotal week in regards to the markets that we are following right now, the dollar, the equities markets, and other currencies along with oil. When we take a look at our longer term dollar projections though, we are still under the pretext and the belief that following this dramatic rise that we saw beginning mid-2014 all the way up to when this dollar index hit 100, we are now in this counter wave, this counter wave 4. Counter wave 4, once complete, will be followed by a primary impulse, final impulse wave completing the set, or a wave 5. And the real question remains, where will we see a termination of this downward move, this counter trend or corrective wave that we've seen in the dollar? In terms of our high projections, 94 has really been the mark. We have hit that point, moved up past that. That could potentially be signaling a termination of this fourth wave. However, I'm not convinced of that yet. My sense is, as we talked about on these previews last week, I really believe that if we can make it to about 92, at that point, we have probably washed out all of the short plays in the market, and that's the point that we would look to re-enter the market from the long side. We're still in a short play here as far as I'm concerned. The real caveat, of course, is what's going to happen in Greece and whether or not there's any kind of a rate hike announcement when the FOMC meeting concludes midweek. we certainly have a lot of markets right now that are going to offer us the opportunity in the days ahead. I'm reluctant to initially put on a position until at least some of the dust settles and some of this fundamental information begins to flow out, whether it's a press conference following the FOMC meeting or some news on whether or not Greece is going to accept the most recent bailout plan offered by the IMF, and whether or not they're really ready to agree to a very, very stringent form or very, very stringent set of reforms, which I personally believe is going to be a hard pill for them to swallow. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another Trending Markets. Bye-bye.